Hello and welcome to LedgerCast. My name is Brian Cross-Collateralized. Before we get to the main show, I just want to say thank you to a brand new partner who's coming on board with all things that I'm doing at Ledger Status and LedgerCast. Go to ledgerstatus.com and see everything that we're doing. In addition to the podcast, you may subscribe on YouTube where I'm putting out videos, looking to put out more. They're part of all of it. And I want to say thank you and welcome to Brave New Coin as a new partner for all things Ledger Status. Go to bravenewcoin.com to learn more about them. You should already know them a little bit because the frequent co-host that I have on this show with me is Josh Olszewicz. He writes there. He writes there several times a week with some of the best technical analysis and fundamental analysis in the ecosystem. They've got other great writers that are talking about the markets. They have a daily email that's fantastic that you really should subscribe to. They have a lot of products, like data products, like their exchange feed, which provides real-time crypto data from 240 exchanges. That's really fantastic. My favorite ticker on TradingView is the BLX, which is the historical record of price for Bitcoin that's updated daily, and it just shows me everything at a glance. It's fantastic. They've got more of those liquid indexes as well. The Ethereum one just came out and more on the way. They're a fantastic partner. It aligns really well with what I'm trying to do with Ledger Status, and I'm so thankful that they are stepping up to support the site and support the podcast and to be a partner with me. Go to bravenewcoin.com to check them out. Be sure to subscribe to their daily newsletter. And yeah, tell them thanks. I mean, because I'm thankful, and this helps me put out more quality content on a regular basis. So I'm really pleased to welcome them as a partner. We'll be talking about some of the stuff that they've got going on over time. And yeah, with that, let's get to the main show. But thank you so much to Brave New Coin. Hello and welcome to LedgerCast. My name is Brian Cross-Collateralized, and today I'm with somebody who's trying to build a product or has built a product and is serving an audience that a lot of the people in the crypto ecosystem aren't accustomed to, and we want to learn about who they're serving, why they're serving this audience, why they're approaching the market and trading in this way. I've got Edward Woodford from SeedCX, and SeedCX is a institutionally focused trading platform. Hey, Edward.
Hi, thanks for having me.
Yeah, it's good to see you and appreciate you coming on. So you guys have built an exchange, and I've heard a lot of good things about this exchange. I first heard from you around the time y'all launched when you were on Anthony Credell's Futures Radio show. Seems like you've got relationships with a lot of legacy market participants, whether that's the people that are trading that you're seeking relationships with now to bring on your platform, or whether it's regulators. So it seems like you've got, kind of stuff buttoned up, and you had a plan going into this, and y'all are trying to approach things on the straight and narrow. Is that the basic introduction to how you would separate yourself from what we know of in the crypto space?
Yeah, I suppose we are firstly institutionally focused. And yes, we've taken an approach to be very regulatory compliant, and we now have the complete patchwork of regulation that exists in the United States that kind of overlays each other. And this week we were approved for 2 bit licenses by New York, which is obviously probably one of the most well-known regulatory licenses that digital asset firms can get in the space.
Yeah, congratulations. That's a real pain. So I'm sure that was a nice win. So yeah. You say 2 different bit licenses. Is that for 2 different products of yours or 2 different variants? What was the structure there?
Yeah, so the reason that we have 2 bit licenses is because as an entity or as a company, we basically have split out or bifurcated match of a trade versus settlement of the trade. And what that means is the match is basically me and you agreeing on a price, and the settlement is then either the ledgering or the actual movements on chain and the wires, or the movement of fiat currencies. And so we bifurcated those 2 pieces. New York is unique in the sense of that it regulates both settlement as well as matching. Most states only regulate, or actually all other states actually only regulate the transmission of money, which is the settlement piece. And so thus we have 2 main entities that were approved. We have the Seed Digital Commodities Market, which is the spot market. And then we have Zero Hash, which is the settlement entity. Zero Hash is now regulated in 35 states as a money transmitter, and the exchange is only regulated in New York. So New York is pretty special in that way.
Okay, so you bring up the two things, and y'all do have a bit of a hybrid model for your exchange. I listened to some other interviews that you did, and you talked about how you have a trade engine that is fully centralized, your platform, and then you're settling to each customer's wallets as those trades are closing out, right?
Yes. So the way that it works is, you're absolutely right. During a trading session, all trading occurs off-chain. And yes, the matching engine is centralized. We actually have physical infrastructure, which is pretty unique in this space. Most exchanges are just purely in the cloud. And the way that our settlement infrastructure works is actually that each client has their own dedicated wallet. And during the trading session, trading occurs off-chain. At the end of the trading session, those positions are netted out. And then there's an on-chain transaction of the net movements. So say me and you were trading against each other, and I bought 10 from you, and then I sold 8 back during the trading session. There would then be an on-chain movement of 2. So it's basically this hybrid model between centralization and decentralization. We think there's a lot of benefits here. The benefits of centralization are the fact that you can essentially settle more quickly. But obviously the benefits of decentralization is the fact that each client can actually have their own wallet, and they can actually see on-chain what they actually own. And it gives greater credibility and reliability for certain institutions that need to prove ownership to, say, auditors. So we think that we're kind of in the middle.
You're still managing custody of those funds, but they are in the individual's wallet?
Yes, so we do hold the private keys of those wallets, but each wallet is per participant on our exchange.
Okay. You talk about a trading session. How are y'all defining trading sessions? This seems to be one of the key differentiators and issues with, like, say, a CME. So are y'all 24/7, or are you operating on market hours?
Yeah, we're open around the clock, but we do have a settlement timeline or settlement window that begins at 4 p.m. Central Time. And so at that point, we then net out the positions, and then there's an on-chain transaction, and then we then reopen the market back up.
Okay, so you open it back up within minutes or something.
So the goal is to get to minutes. Right now, we're actually, the settlement window is about 2 hours. But the goal is to move that back down to minutes, and then over time, even a minute.
Okay, so you have a settlement period up to 2 hours, and that's daily. But then the market is open for people to trade, match orders, do everything 24 hours a day.
Correct.
So this is something that has become a market event worth paying attention to in crypto trading, because you have more and more volume on some of the legacy futures platforms that are only available during traditional market hours. And then you have, 80, 90% of volume that's not on those platforms. So there always seems to be something happening around the close of the market when CME is done for the week, and they have this weekend gap. Is that an advantage that y'all are seeking to exploit, to say, hey, look, you can trade here 7 days a week?
Yeah, obviously this is a 24-hour market, and I think that is one of the advantages that we have. It's been open around the clock for institutions. Obviously there are things that are difficult. For example, banks are closed. But that's one of the benefits of, for example, stablecoins. And the way that our system works is that it will recognize a stablecoin one-to-one in our system as if it were a US dollar. And so people can fund their positions, they can increase their trading power, even when the banks are closed. Also, we have what we call cross-collateralized margin. So what that means is that, say, for example, you want to buy ETH, but you're particularly BTC rich. The way that our margin system will work is that you can actually post BTC. It will convert it into a USD value with a haircut, and then it will allow you to trade ETH. So it's more capital efficient, despite the fact that obviously, despite the fact that the banking network is not available 24/7.
I also saw in the about video on your website that customers can collateralize with other fiat currencies too. Like they can collateralize with yen or something like that, right?
Correct. We can actually collateralize with 19 different types of fiat currencies, which is very, very unique. Right now, we only offer USD trading, but over the next quarter, we're going to be expanding out to Japanese yen, euro, and GBP trading.
That's for the trading pairs themselves, not just collateral.
Correct. Right now, collateral 100% you can do today, but actually an underlying pair we are introducing this quarter.
I want to dig into your trading experience in just a minute, but first I'd like to get clarification for some people that are listening to this or watching it. You say one of the challenges would be banks aren't open. A lot of exchanges in the crypto space, they don't require any form of, there's no margin call. You just are, you're relieved from your assets, and you don't have the option of funding your account with additional assets to help fund a position. What are the challenges with that? Why did y'all not go that route? Or is it a regulatory issue? How do you approach that?
Yeah, so I think it's interesting. I read a report this morning that, for example, BitMEX it makes 50% of its revenue from liquidations. So, it's obviously a big revenue driver. But ultimately, what you're doing is you're liquidating somebody if there's a downward movement again or a movement against them. So to give one example, say that you have a position on for $10,000. You may be liquidated, say, if the price of Bitcoin moves to, say, 9,900, but then it moves back up to, say, 20,000.
Right.
So by auto-liquidating you without the ability to actually fund the position, what you're actually doing is recognizing a loss and actually preventing them from actually potentially gaining from the upside in that example, for example. So the way that our system works is, yes, you can fund positions. We have a risk and operations team that is communicating with clients on a regular basis. I mean, one of the fundamental points is that we use a statistical model to actually define margin. So firstly, the likelihood of actually needing to fund additional capital is relatively low, but if you were to go near it, at that point, we'd obviously engage with you. But we do have the power to take positions if a client does not fund the position. But I think it's important to give clients the ability to actually fund, and it's just a difference. Firstly, we're not allowing for 100x margin, and secondly, we think it's important that a client actually has the ability to not recognize a loss if they are in a position to actually fund with additional capital.
And so you have about 3.3x margin. So if I put on, $10 million into your system, I can trade with roughly $30 million worth of funds, right?
Yeah. So that's very roughly how it works. It really depends. It depends on the product. Also, during periods of high volatility, our margin model will show that you can be less leveraged. So the technical term is a VAR model. So we use that to dictate margin requirements, and then we have a margin floor. But yes, in simple terms, 3.3x on Bitcoin. So $10 million gives you, as you said, over $30 million in trading power.
Mm-hmm. Is that how y'all operate it? Is in terms of your overall trading power, not like some kind of per position situation?
So the way that it works is you get that trading power, but then obviously if you take a position and you're losing and you've got
it's going to be a dynamic reduction of your future trading power.
It's a dynamic margining model that is real time.
So let's talk about who your customers are, because you go after institutions. That's almost a meme word in the retail crypto landscape. They say the institutions are coming. I want to talk about whether you're seeing evidence of that. Why? I mean, you must be if that's where you're investing your money and recruiting and who you're aiming for. Also, I presume accredited investors that aren't necessarily like an institutional investor, but they're, they meet the criteria in the United States as accredited investors to open them up to trading certain types of financial products that you're offering. Where are you seeing upticks in terms of what type of customers you get? Is it more people with money that want access to the additional benefits that you offer from a peace of mind perspective, or is it family offices and hedge funds and prop shops? Where are you seeing an uptick the most?
So obviously, I would say firstly that the institutions are here. And it's just the type of institution that you're referring to. So I think that what we're seeing in cryptocurrencies is an adoption cycle that makes a lot of sense, and it's just compressed from other asset classes. A prop shop is a group that essentially manages the partner's own money. So it has greater flexibility than, say, a pension fund that has a lot of restrictions. So you've seen this adoption whereby prop shops were really the biggest players to enter the space, family offices as well, because of this kind of concept of fiduciary responsibility, which is basically the ability to, or the management of other people's money, which you have to be, it brings on additional burdens. So it's natural that prop shops, family offices, and then certain hedge funds will move into the space first. But I think what you're starting to see is more and more traditional groups that enter the space. We've had news of Fidelity entering the space. And I think the reality is, if you look at the breakdown of where trading is occurring today, you look at the reports of how much of it is on exchange versus off exchange. Off exchange trading is not retail, it's institutional, right? It's groups doing OTC trading. So the rough numbers that have come out is that 75% of volume is off exchange. So that must mean that over 75% of volume is at least institutional. So I would argue that institutions are here. More institutions are coming, but we're following this very natural progression, partly because of the evolution and the ability to make decisions to enter what has traditionally been seen as a more risky asset class, not only from a operational perspective, but also from a price perspective.
With those volume analysis numbers that you said was 75% off exchange, does that include or exclude BitMEX and Deribit and some of the places that are not spot exchanges, but they're where an enormous percentage of overall volume that you see on like a trading volume website where that shows up?
So what I'm referring to is a report that was put up by a group called the Tab Group, which is a pretty well known group, comes from traditional markets. They did a lot of analysis. So I'm not exactly in the weeds of how exactly they calculated and what they included and excluded. Obviously, you could also make the countervailing argument that a lot of on-exchange volume is also, to some degree, fake.
Crap.
So potentially, it all balanced itself out. But I think that when you're really in the space, a lot of groups are very involved in the OTC space. When you talk to clients about where they're trading, I think people have both exchange relationships as well as OTC relationships. So I just the fact, even if OTC is 50% or 40%, the institutions are, I think, in the majority at this point.
Yeah, you had mentioned a number around 200 million in trading volume on a daily basis with my friends at Crypto Street, at the Crypto Street podcast. And the Bitwise report that came out about like real volume exchanges, and there's basically 10 that are real volume exchanges that kind of make up roughly that number. I mean, is there an elephant in the room here where people, potentially your clients, but also, of course, retail as well, where they're saying, look, okay, maybe there's 200 million on all these spot exchanges. There's, Seed, I would say, to me, it feels like currently a boutique platform for people that are really interested in their own operational security, management of their funds, regulatory compliance. But a lot of people have to be making decisions like, well, do we want to take some of those risks, but then go on a place like BitMEX or some of the other places where there's tons of volume, but we know some of the risks that we're getting into? Or do you think these are two different complete sets of customers, and the type of people that'll say, I'll go trade on BitMEX, and the type of people that say, I want to trade on CME or Seed or somewhere like that, they would never even think about trading on a place like BitMEX?
I think there's definitely some overlap, and I think there's, in terms of a Venn diagram, there's definitely right now there's probably a high degree of overlap. I think when you're talking about where institutions will deploy capital, it will be at institutions that are regulated, are offering operational security, are providing better technical controls, are providing better APIs, are offering credible margin that gives them the ability to fund in that instance. So I think there is definitely an overlap, and clients take different amounts of risk. Very often in kind of traditional markets, people think about a Sharpe ratio, which is essentially a risk-adjusted return. I like to think of risk-adjusted returns in crypto with operational risk. So I think what happened, particularly during the crypto winter, which now seems so far ago, what happened there is that people started to really take operational risk into account, even groups that were previously very willing to take operational risk. Because if you are trading and you're making very high returns, it is illogical potentially to take very high risks, both on the type of assets that you're investing in, but also on the operational risk. When those returns come down, on a risk-adjusted perspective, it doesn't necessarily make so much sense to trade on super risky platforms operationally. So that's where I'm talking about clients that have already been in the crypto space for many, many years. I think that's where they start to become very interested in CCX, as well as the fact that we offer, fiat accessibility, margin, better technology. A lot of these groups have experienced the pain points, and so they know what you're referring to. And then there's obviously the next wave of cryptocurrency traders, where it's much more binary choice. I will only trade on a platform whereby they are regulated, they are providing certain controls. And a lot of people talk about regulation as being a sufficient condition for success for a lot of these platforms. I don't think that's the case. I think regulation is the baseline that is needed for certain platforms for certain groups to look at you. There's so much more nuance in terms of getting a more sophisticated institutional platform or group to actually trade on you beyond just regulation.
And we're potentially starting to see some of these stories come home to roost, because maybe one of the things that's enabling or giving people the courage to go out and trade in the Wild West is there hasn't been a lot of regulatory enforcement in the space, at least from the United States, in terms of really cracking down. We're just seeing today the CFTC is investigating BitMEX. We have no idea what that means, but some of the questions are well, we are curious if they know that they're catering to an American audience, and it's of course they know that at times they've made their platform highly available to Americans. So maybe we're seeing some of that stuff come to roost. Your play seems to be the long play. You could have approached this and said, we're gonna incorporate in the Caribbean or someplace where we feel less reachable, and we're gonna open up to anybody with an email address that wants to sign up. Mm-hmm. You're doing this very differently. So let's say, okay, now you've got people on the platform. They're looking for a high quality trading experience. This is the part that if I go to your website, I can't go take a peek at the exchange. I have to be a customer. Mm-hmm. What's the trading platform look like? You're offering multiple coins, it's not just Bitcoin, right?
No. So we offer Bitcoin, Litecoin, BCH, and ETH. This quarter, we're also going to be offering Stellar, and we also have 3 stable coins: USDC, TrueUSD, as well as Paxos. So yes, it's a slightly different approach, but I think your point about enforcement is an interesting one. And I would say that it's not necessarily in the long term. I think we're starting to see changes occur, even today, giving you an example. And I think what's interesting there is that you're going to start to see more enforcement. Just think of it from a regulator's perspective. You have the president of the United States on stage saying that potentially cryptocurrencies, in some instances, are one of the most dangerous things for the country. Yeah. That has an effect. That changes people's perceptions. That emboldens people. It looks like it's a priority of the government. And that changes things. But also, I think what people don't realize is that the reach of regulators is far. If you manipulate an exchange that is based in the United States, that is a federal crime, whether or not that platform is regulated or not. It's felony. And there's been time and time again where US regulators have claimed jurisdiction from people who have been abroad, who have somehow interacted with the US. And that doesn't necessarily mean it's on a US exchange. It may be that they've interacted with the US banking system. So the reality is that I think that the argument was probably maybe somewhat, you want to put something over your ears and be like, look, we're good. I think what's coming to the fore now is that you're not good, and that regulators will retroactively look at what's being done. And so I think it's going to be a very interesting 6 months from an enforcement action perspective. And I think as a regulated platform, our view is, look, do we think all regulation is perfect? No. Do we think that things can be improved? Yes. All we ask for is that the rules are enforced in a fair and equitable way. That is all we ask for. And so when enforcement actions occur, provided that they are non-discriminatory and fair and balanced, then that's only a good thing for the industry. Because if the space is to evolve, bad actors manipulating prices does harm people. It harms retail investors. I mean, it harms a lot of people. It may sound funny in these pieces, and people, even this week, we had CoinDesk interviewing somebody who went on the record as saying that they would be paid to do it. And I've gone on the record before and said that I get approached at least weekly from people who try to say, look, if you pay us, we'll do it. So a lot of the time it's the platforms themselves. But what that does, when you actually think about what it's doing, it's manipulating the price of something. And we've spoken about liquidations as well. So what that means is people are losing huge amounts of money, and they may manipulate the price for seconds or even for hours. But if you've got this liquidation concept in as well, which we've already spoken about, it really harms people. People have lost a lot of money because of manipulation.
I mean, I think we did a whole probably half an episode talking about back when someone clearly purposefully market dumped on Bitstamp, and it seemed their purpose was seemed obviously to manipulate a cascade on BitMEX to force liquidations and make a deeper wick on BitMEX, where they can play it both ways. They can get short on BitMEX, market dump on Bitstamp, close into all those liquidations on BitMEX, and probably get long on the other side and win at least twice over with a significant amount more leverage on BitMEX than the value of any lost value from market dumping on Bitstamp. And it was pretty clear and obvious, and they only had a 2-exchange blend of what was making up the BitMEX price.
Yeah, I mean, that's why when you look at, for example, the CME, if you actually look at their underlying composite index, what the regulator actually forces them to do is actually have information agreements to prevent exactly that thing. So if there's suspicious activity on two very distinct platforms, the two platforms will share information. So although it looks very obvious, obviously Bitstamp and BitMEX, those groups aren't necessarily talking. And maybe they're not interested in it, potentially in talking. But if you look at the way that the regulated markets work, in exactly that piece, exactly that example, would be greater clarity in terms of what actually happened. So if it was one group doing exactly as you described, it'd be very, very obvious and clear, and be found out.
Yeah. So let's one other note, just because I think you're right. I think that we are in for a reckoning. I don't think it was any coincidence. I'm curious your take for Binance finally saying, okay, U.S. customers aren't allowed here anymore. We've got this BAM thing, Binance America, whatever it's going to be. And I don't know, they seem to be walking into that like that'll be fine. Like U.S. regulators will be totally fine with Binance just walking in and offering a, American regulator-friendly exchange there, except for the fact that they made it completely open, simple, no barriers at all to trade on Binance, where they were trading securities. Their own token, which they use to run their company, is likely a security. And it doesn't seem like it's going to be an easy road for them to me. Do you think they're being naive in that in that ambition?
Look, I mean, at this point, we're regulated by over 50 different regulatory bodies, both federal and state. A lot of what it is with regulators, it is establishing trust. It is establishing the sense that, regulators come in and they do audits. But the day-to-day piece is there has to be a high degree of trust. And so, if you have a reputation, I think it may not be impossible, but it would be substantially harder. And the regulators will look very, very closely about, a lot of regulators have a concept of good fit around the people. So, for example, myself, I've been background checked extensively. Very personal information given up to regulators, fingerprints. And the reason they do that is to basically ensure that you are somebody that is, to some degree, biometric reputable. A regulator may say, look, this is not a reputable group, and that's it. They're not obligated to provide licensing. So look, we'll see. I mean, that's what's so fascinating about the digital asset space. It changes all the time. Regulators come in overnight, and this enforcement action will definitely change the way that people look at this space. A lot of the kind of VC, the kind of startup mentality is also for forgiveness later. When the financial services space is a little bit different. Let's see if forgiveness will be given, and at what cost forgiveness is given, if at all.
Yeah, and I'm showing my hand a bit here, but I mean, to me, it seems obvious that Binance themselves have concerns because, I mean, CZ doesn't even seem willing to step in the United States because it's just too much of a risk. So yeah.
I mean, if you look at what's happening from offshore exchanges, and you look deeply at, or very closely at their terms of service changes that have been made recently. Look, everybody talks in this industry. Everybody knows, before things happen, what's happening. I don't think it is a coincidence but to your point, I mean, it doesn't necessarily change what's happened in the past. So we'll see.
Yeah. All right. So let's say there's 200 million in more, legitimate volume, the type of places where an American institution might be willing to trade. What percentage of that volume are you guys capturing today? Are you in single-digit millions, or what's your volume look like?
Yeah. So we project the market being 200 billion.
I'm sorry, I keep saying million, and I mean
sorry,
billion.
I'm the one making the number bigger, which is very often not what I do. But I mean, it's so we estimate the market today is around 200 billion, and that's a function of what I spoke about before, this TAB research that suggested that the OTC market was significantly larger, and then looking at the volumes and adjusting very roughly for so-called fake trading. So today, what is live is our spot market. We now offer some of the best execution globally for BTC, ETH, BCH, and Litecoin. We now have close to 150 customers, institutional customers, and we're now doing several $1 million a day on a consistent basis. And obviously, our goal is to go out and obviously increase that. And I think we've got a very clear path to do that. Obviously, increase the number of fiat underlying pairs that we have on our platform, as well as obviously institutions take a little bit longer than retail to actually get live. It's not just as simple as pointing and clicking. A lot of institutions want to get technically integrated back office API, so it takes a little bit longer to actually get clients live as well. So with those two pieces combined, we think we've got a very clear growth path on the spot exchange. And we're also excited to launch our swap execution facility, which is derivatives. And the contracts that we'll be launching, subject to regulatory approval, and we think we're very close, is a physically settled forward contract, and it will have the near 4 weeklies and then the near 3 months. And so it will be a physically settled contract as opposed to a cash settled contract that exists, for example, on the CME.
A lot of people are going to hear 150 customers. That sounds like nothing, but you go to Coinbase, they have whatever it is now, 20 million customers, and some tiny fraction of 1% are trading. Is your average customer an active participant on the platform on a weekly basis?
So yeah, the answer is yes. I mean, it's when we talk about institutions, it's a little bit different. So in the FX space, for example, there's platforms out there that are doing $50 billion a day with 25 customers. So our focus is on larger customers, active customers, and a diverse mix of customers. You don't just want one set of customer on your platform because groups rely on different pieces. So Yes, I mean, it's a slightly different focus, but what that does also mean is that because we're not retail orientated, each one of our clients actually gets a much higher level of support. We have 24-hour phone call support. Every single client has a dedicated account manager that they can call, that they can get additional services for. We're much more reactive in terms of what we build. We're building just purely for this different mindset, which allows us to focus on the features that really matter to this type of customer.
You said it's you've got a quality execution globally. How is your book being managed? How is your if you have a big customer, they want to come in and they might want to execute an order for, I don't know, $50 million or something. Like, how do you handle an order like that?
Yeah. So firstly, we don't trade against our customers. So we don't market make as a platform. So our markets are made by a combination of groups globally that are market makers that post.
And they're choosing independently to come in. It's not.
No, so they're there because they think that they can make money by making markets. So we don't market make against our clients. So look, if somebody wants to do $50 million, it's probably a little high. But when we're talking about cost of execution, we're talking about the change in the average price that you get filled at versus the price that you see on screen as kind of the best bid or offer. And so a market may look super, super tight, but if you want to, say, execute even just 10 BTC, sometimes the average price is a massive difference from what you actually see on the screen. Mm-hmm. And so when we talk about best execution, we're talking about being able to execute anywhere between 2 to 150 BTC on a consistent basis with low slippage, which, as I've defined, is the movement from the average to the best bid offer.
How do you manage your OTC business? Do people come to you directly for that?
So we don't run an OTC desk. Everything is on screen, but obviously we can do on the platform OTC size. Where we do service the OTC market, we're not an OTC provider. We provide infrastructure for the OTC space, is our assessment infrastructure. And so what our assessment infrastructure will do is, one, it handles the regulatory pieces, so money transmission. It manages the complexity of moving fiat money as well as cryptocurrencies, and also does a lot of things around, for example, capital efficiency through a concept called netting across counterparties. So we service the OTC space. We are a service provider for OTC providers. And we're going to be announcing a couple that are going to be using our assessment infrastructure in the next few months. So that's to look forward to. But we are not ourselves a kind of principal OTC group. So we don't put our own capital up and trade directly against counterparties. They can either come into our exchange and trade against an aggregate of counterparties, or we can service the infrastructure for their OTC business.
How are you guys making money today?
Yeah, so we charge in a very similar way to exchanges. We charge basis points. So it's on our platform right now, it's free to make and 8 basis points to take. We don't make money from trading against clients and these other pieces that a lot of platforms do. So it's a very simple fee. And there's nothing else that is hidden, nothing else that is charged. That is the only way that we make money.
What about the scenario that you mentioned with an OTC provider comes in? Do you make money in that engagement, or how's that work?
What we do there is we charge a assessment fee, and we don't disclose those fees.
Okay. And then you have multiple coins. You're talking about bringing in multiple different fiat pairs per. Are you worried about spreading out the liquidity that you do have amongst all of those? How are you? What's your plan to build liquidity? The reason I ask is because your customers may be more knowledgeable about how to handle an environment where they have to take time to enter a position or whatever. What seems to rule the day in the retail environment is go to the place that lists a lot of stuff, has gigantic books that are highly liquid with low slippage and things like that. And we seem to be seeing that at Binance, at BitMEX, and places where, even retail traders come in and they try to get into a position with a relatively small amount. Like if they're getting large slippage or the books look super thin or there's a super high spread or whatever, they get frustrated with the exchange as a whole. So do y'all have a plan for building and managing liquidity?
It's obviously working closely with partners. It's obviously the ability to bring in new partners. For example, bringing in groups that are very large in Eurobooks that exist, for example, on Bitstamp. Bringing in clients that are very large on, say, Japanese exchanges for Japanese yen. So it's bringing in a diverse range of global market makers. But there's also interesting things that will help market makers make markets in a more or in a significant way. So, for example, you can lean on what market makers call leaning on. You can lean on books. So, for example, if you have BTC USD, then you have Japanese yen BTC. You can use the exchange rate essentially to price the other book. So, if you're a big USD BTC market maker, as long as you have an exchange rate for the Japanese yen book, you can quote, and then you can then hedge out on the BTC book. And then that also creates interesting opportunities where there may be some inefficiencies and some ARBs, and what people call triangular ARBs, because you have, for example, BTC at the top, and then at one corner you have USD, and then the other corner Japanese yen. And sometimes those prices may not always be exactly how they, in theory, should. And so that's considered an ARB. And that's where market makers can have opportunity and can also lean on these books to quote bigger sizes, apart from just being a specialist on quoting in that fiat pair.
Yeah, it sounds familiar to something like I feel like Bitflyer may have been doing, because they have a really robust JPY pair, if I recall correctly.
I don't know how they make markets, but certainly it's a common tool used for market makers to lean on other fiat books.
And so one of the ideas that what you're expressing is, let's say Bitstamp and Kraken have pretty good BTC Euro books. So if CCX has a Euro pair, it's advantageous for that market maker to add an additional exchange. So you can try to recruit the same market makers that are on other exchanges to just broaden the number of exchanges that they're working with to manage what they're doing.
Yeah, I mean, some market makers certainly make markets in that way. They're simply, pricing off of different books directly in the same fiat pair. But potentially you can also lean on other fiat pairs as well. It's kind of what I was referring to with the triangular spread. But yeah, I mean, these books exist, market makers exist in these markets, and they are onboarded or in the process of onboarding. And we've been able to get very good liquidity in our USD book, and we'll do the same in Euro, Japanese yen, and GBP.
Let's finish on something that you brought up in another interview that I was really interested in. And you talked about how you think things like precious metals are going to end up on, I guess, crypto-based exchange platforms. How do you envision that working? Or is that a product y'all are working actively to try to launch? How do you envision it? How can I trade gold? How can I trade gold by depositing Bitcoin on your platform?
Yeah, so I suppose what I'm saying there is that we're fundamentally as a company very bullish on tokenization, and that is why as a company we are regulated both in the commodity space and we are also getting regulated in the security space, because that's what we find exciting about tokenization, is that it's potentially revolutionary for all potential assets, which is pretty exciting. So tokenized gold is just one example where I think there's been a lot of interest. There's a lot of companies trying to tokenize gold. And one of the values of our settlement infrastructure is that it's distributed. And so the value of tokenization is to some degree the power of the blockchain. So our belief is that you should build a settlement infrastructure that actually leverages the power of the blockchain. So we built for potential greater tokenization, whether it be gold or silver or some other commodity, and then potentially, over time, securities as well. I think there's certain use cases, but gold makes a lot of sense. Other precious metals make a lot of sense. So, for example, certain precious metals used in the iPhone, customers care where that metal's come from, because sometimes that metal comes from mines where children are used. Being able to track from the source all the way up to where it's finally used matters. There's actually a value there. And so I think precious metals, because of where they're typically mined, it makes a lot of sense to tokenize, because it uses one of the powers of the blockchain, which is this kind of ledger and proof of ownership all the way through the life cycle.
Are your customers, are they interested in, I guess, the broader landscape of altcoins, or has the interest primarily been in the large caps that y'all provide? Are you bullish on tokenizing the world with all these silly utility tokens from ICOs?
Yeah. I mean, obviously, there's an argument about what is considered a utility and what's considered a security.
Yeah.
I think fundamentally it's an exchange. Our role, and this is one of the reasons why we don't trade against customers, why we don't actually allow employees to trade cryptocurrencies, is to remain completely impartial. And so our goal is to not say this is going to win, this is going to lose. The market is here to decide that. Our role is to simply provide a platform whereby it's traded safely and in a fashion where people are not being manipulated and losing money because of that reason. So, look, I think there's going to be a lot of change. There's going to be a lot of churn in the assets that exist. But fundamentally, we're bullish on the asset class as a whole. And so we will list tokens and assets that, one, are in compliance with our regulatory entities that we have, but also taking a very non-emotional and kind of non-incentivized approach for listing those assets.
Are your employees allowed to have a buy and hold over time plan, or is it just a no ownership whatsoever ban?
No. So you can definitely own cryptocurrencies. It's more akin to
You just can't active trade.
You just can't actively trade. And so if you want to buy or sell whilst you're at seed, then you have to go through a committee whereby inside information is assessed. And so it's there to ensure that there is not a conflict of interest amongst employees.
Okay. So someone can go to this committee and say, look, I want to buy $1,000 worth a month for the next year. And y'all say, okay.
The way that the committee technically works is that you get authority to execute within 2 days of being given authority. It's not necessarily a rolling piece. But yes, I mean, that committee is run by a compliance officer. And the rules are clear. And look, ultimately, the people I work with understand it. Our goal is to build the value of the exchange, which is inherently a very diversified bet on the entire crypto market. Yeah,
and I get that completely, but I do like if someone's got a little skin in the game, in addition to being in the business model of understanding and holding the underlying.
Most people work here are passionate. Everyone here is passionate about the space.
Yeah.
And look. People have different holdings, but it's just ensuring that doesn't impact the way that they run and work at Seed.
So final question. Let's say I got somebody listening to this. They're an accredited investor. They would be a qualified candidate to trade on your platform. What's your high-level pitch for like a mostly retail but active trader to come and trade on CTX instead of, say, Kraken that offers margin, or any of the more cowboy platforms like BitMEX or Deribit or places like that?
Yeah, so hopefully listening to this podcast and talking about the different areas have been helpful. I mean, you describe these groups as cowboy groups. The reality is look, if you want to trade on a reliable, safe platform where you have a high level of support, very strong technology, the ability to control what you do, good auditing, good reports, so that at the end of the year, it's not a complete mess to actually understand what you have and haven't done, ensuring that you're in compliance, very strong cost of it, very, very good cost of execution. The ability to get in and out, the ability to talk to someone on the phone, the ability to get somebody reply to your emails, the ability to get money in and out within hours, not days. These are kind of some of the differences between us and others.
Awesome. Well, we'll let that be that. You're at seedcx.com. Do you have a personal Twitter or anything like that you want people to follow?
I don't have a personal Twitter, but you can definitely follow SeedCX, which is just at SeedCX.
Sounds good. We'll link that up. Edward, thanks for joining me. I appreciate you sharing about what I think will be a more common avenue for people to trade over the years to come. So I appreciate you sharing that and joining us.
Yep, thanks for the time. Cheers.
Bye.
In the blink of an eye, the easy river has just run dry. In a house of cards, I feel the breeze wound so tight I can barely